Good morning, everybody, and welcome to What's Hot on the Open. We're taking a look at all of the opening market action here at MarketStream.live. My name is Joseph Cusick from the Cusick Group. Securities offered by MoneyBlock. The market's moving to the upside again. Taking a look at the Dow Jones Industrial, we can see that it's up about 1162 at 20,754. Basically, after hitting that all-time high yesterday, continuation to the upside. Looking at the NASDAQ Composite up at 5346, up 128. And you see the Russell 2000, that domestically centric small cap index, trading at 1407.11, up 5. You have the SPX, though, the S&P 500. This is the cash index. It's actually down $2.62 today at 2362.78. You have also volatility. Volatility has been on the move. Off of its lows, we saw at 1140. It's bounced again today. We see it at 1185, challenging that $12 level. These are levels that usually it peters out and starts to pull back again. It's now trading up 28 cents. We're also seeing some movement in the commodity space. We're seeing that nat gas actually coming off of those lows yesterday at 659, and you have crude oil, USO, trading down 18 cents at 1136. That was after a couple days of some decent upside with crude and the futures over $54, and USO challenging and looking to potentially challenge that $12 level, pulling off this morning. Some of the names that we want to take a look at real quick that are hot on the open. We're going to start with McDermott International. Came in basically trading, this is what I would consider a very expensive option at $7.95, up 4 cents. The reason why I'm bringing up McDermott, I saw some unusual activity there. Normally, I don't take much stock in unusual activity, except for the fact that I saw volatility pop first on the stock. And so I looked and I saw that some puts traded. We're going to take a look at that. Ralph Lauren, saw a downgrade this morning on Ralph Lauren. I also saw a volatility punch a little bit in Ralph Lauren. Stocks trading down 69 cents. I also saw some unusual option activity. We're going to take a look at that as well. Also, yesterday I had mentioned a sector that was on the move that had been lagging the market upside. That was REITs. IYR was the ETF that I pointed out, but I also, on the housing data that came out, as a matter of fact, we saw that looking at the housing data, that home sales were up 3.3%. This is the highest level that we've seen since 2007, right before the financial crash. Not to infer anything there, folks, by the way, just a notable note. We had 5.69 million units moving in the month. We saw that the Home Builders Index up 12 cents, and specifically we saw Toll Brothers, who came out with better than expected earnings. They're up $1.93 on the housing news, as well as some solid earnings, trading at $33.91. Let's dig a little bit deeper in some of this. Specifically, we want to take a look at the overall marketplace from a technical perspective. We've seen how the price action is going. I'm actually in the premium toolbox at MarketStream.live. You can go there, real-time charts, and you can see the S&P 500 right now. Actually, I want to bring up this one, SPX. Actually, we'll do the spiders. I apologize. We'll take a look at the spiders right now. That's the ETF that you can utilize to track the S&P 500. And right now, you can clearly see that the spiders are definitely in control. But this is the level that we're looking at. That 2336.50 level. This is a level that has been unable to breach and stay above. You can clearly see that the bulls are in control. So as far as saying that there is any negative sign right now in the markets, there isn't much of any, except for the fact that we continue to see volatility move to the upside and price action starting to stall out. We're going to watch this a couple more sessions on the S&Ps. Taking a look at the Dow Jones, the Dow Jones Industrial. We'll take a look at the the diamonds. Again, the ETF that tracks that, we're seeing some consolidation here. Now, the next upside on the diamonds is going to be that 207 mark. This is basically a tenth of the actual industrial composite. But you can see right here, we have that resistance right there at that 207.50 level. Clearly, the next level of support is well below that. That's the 20-day and the 50-day moving averages. So you can see that there's solid support, solid price action, but we've really run pretty far, pretty fast. And then finally taking a look at tech. Now this is where we're starting to see a little bit of weariness. Again, tech, and specifically when you look at tech, looking awful lot like its big cap brethren, but you're going to see something interesting that I want to bring up in a sector here. Semiconductors. Semiconductors have been the leaders, but as a matter of fact, if I scroll in today, and you're going to see they're starting to get a little tired. We're seeing their challenge, the SMH, which is the semiconductor ETF. It's right now got a support level of around 77.45. Watch $76. That's the 20-day moving average. If we get any weakness in semis, that could be a little canary in the coal mine that tech might be under some pressure. Watch this very closely. It's coming off of its highs. And we're going to see if there's a challenge of that $76 level, which would be the 20-day moving average. Couple other things that we want to take a look at. Take a look at UNG. Nat gas bounced today, and we're going to watch this closely, especially into the inventories data that's going to be coming out tomorrow. We're going to see with the warmer weather whether the inventories data is going to move nat gas further to downside. Now, it has had a little bit of a recovery today, but we're going to watch that very closely. Also, watch USO. Want to take a look at some of the option activity that I saw, specifically MDR. We saw the March. I'm taking a look at the March $7 puts. Now, today you can see that the volume came in. There was 2,600 contracts that traded in McDermott. Now, there is ample implied or open interest. So in other words, contracts have traded here, but they traded right around a nickel. Right now, the current bid ask is a nickel bid at 10 cents, and the last is 7 cents. So you're starting to see some action here, but these puts only have a 17% probability of being in the money. That's the delta by March expiration, which is about 3 weeks. This looks to be a potential hedge for McDermott. Now remember, if we take a look at MDR, and I'm going to scroll up here real quick on the charts, again, you're going to see that the price action right now to the downside, it's challenging that 50-day moving average. This is a great example of when it sliced through its 20-day yesterday. The news came out this morning. Their earnings and revenues beat, but the stock basically pulled down in advance of that earnings report, and you see that it's bouncing off of that 50-day moving average at right around that 776 mark. This is important. This is what I call institutional support. We see that it keeps tagging this and it stays above. If it breaks that 775 level, you're going to see 580 is the next support level of significance on the 200-day moving average, but 720 is the midterm support level as far as the more recent action. But again, you're seeing that consolidation on the price action over the short and long term in McDermott. It looks like there is a put buyer potentially looking to hedge while over the next 3 weeks. Also, Ralph Lauren. If I scroll up here, and I have the font big so you guys can all see what I'm actually looking at, but if you take a look at RL, and if I take a look at the March options, now I'm going to take a look at the March 80 calls. This is what I saw this morning. I saw a volatility pop, and right here, you saw the volatility pop. It actually popped to 25. And I also saw 2,200 of the out-of-the-money calls trading at the $80 level. Now, if you take a look at the straddle strangle market, because Ralph Lauren already reported, it's a retail name, but if you look at the straddle strangle market, with the stock basically trading right around $77, you take the straddle, which is the 77 calls and puts, that basically prices out almost at $4. 3 and some change. And then you take the first strike put and the first strike call. That basically gets you to about $8 in total. You divide that by 2, This is actually pricing in, the options are pricing in a potential of right around a $4 move over the next 3 weeks. That means that there is a range of basically between 80, 81-ish or as low as 73-ish. That's the range that they're pricing in for the potential move. Does it have to go that way? No. That's basically right now that eyeball that I did on that estimated move analysis has a 50% probability. No better than a flip of a coin. But it is telling you and it is showing you that Ralph Lauren and the options marketplace is pricing in the potential for that to occur. Now, what is the potential for it to get down as low as even 75? Only 15%. Or as high as 80? Only 31%. Right? Those are the probabilities at expiration. So it's very interesting that we're starting to see that there's strategists positioning here to the upside on Ralph Lauren. All right, folks, that is it right now for all the market action that we're taking a look at on the open. Join me at 1:30 Eastern Time. I'm going to talk about some strategies. Yesterday, we were talking about stock replacement. You can go check out that video. We're utilizing leaps. Today, we're going to talk about selling puts and looking at that strategy, especially with markets at all-time highs. All right, we'll see you at 1:30 Eastern Time here at MarketStream.live.